a crazy market update, I do think it's time to transition into our main topic. We're now starting to see more and more security tokens get listed on secondary markets and marketplaces, so it's probably time that we covered an episode on investor relations.
Fully agree. This is a critical topic from my perspective, actually, when an issuer conducts a public security token offering, accepting investors from all over to invest digitally in you or your company. Transparency and communication are absolutely key. It's true, like as a private company, you do not have to have a lot of disclosure requirements other than what you outline in your offering. You don't need to report key events or submit quarterly audited financial statements. That's, of course, only for publicly traded and registered companies with the SEC. But think about it, folks. That's by design because the SEC wants public investors to be aware of things and served properly so that they can make the correct investment decisions. The same logic shouldn't be any different for security token issuers that are now, quote unquote, publicly facing, if you will.
Totally, Herwig. I mean, just because you don't have to do it doesn't mean you shouldn't. Obviously, quarterly audited financial statements are expensive and time-consuming and not needed for every issuer or asset type. So don't necessarily take this as we're advising you to copy the public disclosure model for your token. However, we believe that the ability to properly communicate with investors can and will have an effect on your token price and liquidity.
Yeah, right. I think that the mantra here is if you want to prove to the world you are a quality issuer with a quality asset to invest in, you need to do as much as you are able to properly communicate with investors. So Kyle, why don't you share with our listeners some of the things issuers and investors should look for in a strong investor relations program?
So the first and foremost thing that I think is very important to communicate is how investors should attempt to value your investment. The more information you can share to guide investors into making an assessment, the better, because you have less friction for them to have to do outside research, and you can show that you care about offering a fair investment opportunity for everyone. You're not trying to hide anything, so you may as well be transparent about it. This means focusing on the asset fundamentals. Are there appraisals or audits you could reference? Are there comparable companies and benchmarks that are considered industry standard? How the issuer comes up with their evaluation of the investment opportunity is critical to an investor being able to calculate their potential ROI and know whether they are going to get a good deal or if they're getting scammed.
Well said, Kyle. I mean, I have to say, I think it's the most important thing to focus on, actually. So some examples are Blockchain Capital releasing their quarterly NAV report, which is how, one of the ways you can calculate the value of funds portfolio, something we actually cover in detail in episode 52 of the show. It could also mean sharing key research or asset reports if you have a commodity like gold or real estate, or could be pointing towards, a previous financing round matched with KPIs and growth that are in line with other companies in the same industry. As you said, Kyle, anything an issuer can do to help educate the investor on how to value the investment is so important that I would go as far as to say without it, you're really just bringing a purely speculative offering to the market with nothing to back it up.
Yeah, you absolutely would be. And to build trust with investors, the first thing you need to do is prove to them that you have a good investment opportunity from a financial perspective. But this financial layer is just one of the many layers of due diligence. Another is, of course, simply just updating your investors about the events that could affect the token, how much a company does press releases and updates, and also the quality and substance of those announcements will absolutely have an effect on trust again. As an investor, a company that is much more active when it comes to sharing information and team updates and showing that community is less risky than a company sharing little to no information, which makes it very difficult to price the assets or even trust that the issuer is going to update you in a timely and suitable manner regarding future key events.
I think you nailed it with trust there, Kyle. Another great way to look at this trust model is, by the type of investor. So an institutional investor, for example, they have mandates and requirements for any investment they make, which may include audited financials or adhering to certain communication requirements for the issuer. An angel investor investing into an early stage startup likely does not have the same requirements as this institution, right? So everyone is different. If you want to attract certain types of investors like institutions to your token, you better be prepared to give them the world-class investor relations that they're looking for.
Absolutely right, Herwig. Did you have any other aspects you think investors look for in an investor relations program?
Certainly, I think community is another big one, right? It's the one thing to be forward-facing and very active. It's another to have a thriving community and social media behind you. This shows that there are lots of other people engaged and that the company cares about hearing from you, opening ways for investors to communicate both with each other or even directly to the company to ask questions, right? Especially given that security tokens by nature are creating an entirely digital investment experience, I see that there's no reason the investor relations program can offer a digital community to go alongside it.
Certain investors even take this into account and use it as a signal. So now it almost becomes required to reach a certain type of investor by having that active community, and it creates that trust that they need in an issuer. They're giving you their hard-earned money after all. You may as well do something about it.
Absolutely right. I mean, for any issuer, a well-thought-out investors relations strategy, especially depending on who you want to reach as investors, is critical once you list a token on a secondary marketplace. It is so important for issuers to think about this and implement a strategy and process that investors can become comfortable with. Because as I mentioned in the beginning, public companies are at least required to adhere to some standard of investor relations, while private issuers of security tokens are not. So it's completely the Wild West out here. Sometimes the exchanges or marketplaces may have guidelines themselves for the issuers to follow, but in the scenario of peer-to-peer markets, it's all up to the issuer to offer a great investor relations program or one that leaves many investors with too much concern to want to invest.
I love the way you said that. I think that just about sums it up, man.
I think so, Kyle.
Well, then I believe that that's a wrap for our show today. Thank you to everyone for tuning in to episode 60. That sounds good to say. And remember that you can find all of the news links and token information at stomarket.com. And you can catch all of our previous episodes and main topic segments as its own separate video, all of that on YouTube.
And please also feel free to reach out to us with feedback, questions. We're on social media, or you can engage with us directly on stomarket.com/news. As I mentioned earlier, you can submit comments, news articles yourself. It's all there. But thanks again for listening, and I hope to catch you next week on Tuesday.